Recently, I've been working on a brand new strategy concept built around EMA channels and an indicator I'm using for the very first time, the Andean Oscillator. The Andean Oscillator is a volatility-based strength indicator that separates bullish and bearish pressure into two components. It measures very effectively whether buyers or sellers are in control of the market. I'm glad I could work on this setup because by combining this simple logic with a few of my go-to filters and my advanced position sizing approach, I was able to build a strategy that now ranks in the top 5 in our strategy ranking spreadsheet. And that spreadsheet has more than 50 strategies ranked. This optimized strategy generated more than 1000% net profit over the last 4 years, which means it easily outperformed the Bitcoin buy and hold. And the most amazing part, after checking the whole BTCUSDT price history on Binance, this strategy still outperforms the buy and hold with more than 5500% net profit. This time the strategy script is not free, as this is a complex 350 lines long code that has my advanced position sizing and trading stop loss methods. But don't worry, as in this video I will talk about all the indicators needed for this strategy, show you the optimized parameter settings, explain all the entry and exit rules, and show you the backtest results so you can try out the strategy manually for free. But if you'd like to get access to the full strategy script, you can purchase it from the official TradeSmart Patreon shop. I will leave a link down in the description. And if you are watching this video early enough, I have good news for you. The script is available with a 30% discount for the first week after the release of this video. To get the discount price, use the promo code EARLYBIRD30. By purchasing the script, you are also supporting the channel, which helps me continue releasing free strategy scripts that you can find in our strategy ranking spreadsheet. Without wasting any time, let's get right into it. Okay, so this is how the strategy script will look like. On the top you will have the main logic settings, the EMA length, the Andean settings, and the CCI limit settings. Then you can set up if you want to trade longs, shorts, or both. Here you can find my advanced risk management method, which lets you risk a set percentage of your account based on the current capital or the initial capital. When you're using the current capital, it means a compounding position sizing, and the initial capital means a non-compounding one. Then you can set up the fixed stop loss and take profit levels and the trailing stop loss. And under that you have my edit filters, which are the ADX with an EMA, an MFI with an EMA, and we are also using a force exit with an 80 candle count, so we are not stuck in a trade for too long. Okay, and now let's see the strategy. First head over to TradingView, set up the BTCUSDT Binance 30-minute chart. Once you got that, let's add our indicators. Open up the Indicators tab and first type in MA ribbon. Add the moving average ribbon. Then type in NNFX ATR, our usual stop loss and take profit indicator, add this one. Then we will need our main indicator, the Andean Oscillator, add this one. Then the CCI, add the commodity channel index. Then type in MFI, click on the money flow index, and for that we are going to use an EMA2. So add the moving average exponential, and finally our ADX with an EMA. So click on the average directional index, and we need an EMA for that too, so EMA, and click on the moving average exponential. Okay, at first look, it might seem that we are using a lot of indicators, but don't worry, after I explain the strategy, it will be pretty easy to find the entries and the exits. But first, we need to change a few settings. So first of all, open up the MA ribbon. We are using the MA ribbon to get 2 EMAs within one indicator. This will give us the EMA channel. For that, set the MA type to EMA, set the first MA type to use a high source, and the second to use a low source. Both of these EMAs should use a 10 length. Now you can use whatever colors you like. In this case, I will choose yellow. Next up, open up the NNFX ATR indicator. This will be your stop loss and take profit indicator, and for that set the X value, its period, to 175, the take profit multiplier to 20, and the stop loss multiplier to 8. In the styles tab, uncheck the main ATR, we won't need that, and make sure that the line style is set to step line. Next, the Andean Oscillator. If you take a look on this indicator, first it might be confusing, but it's pretty simple to use. We have a red line, which represents the bearish power, and the green line, which represents the bullish power, and we have this yellow line, which generally works as the dead zone line in the Wada Atar, so it's a baseline. When the red line is on top, so it's above both the yellow and the green line, it means there is a strong bearish momentum, and it shows clearly on the price. And when the green line is above the yellow and the red line, it means that buyers are in more control. Moving on, let's set up its optimized parameter settings. So for length, I found that 12 works the best, and the signal length should be set at 51. Moving on to the CCI. The CCI represents how far the price is from the general norm. So if the CCI is high, it means that the price moved way more above than the normal price, and when it's below, it means the opposite. For this one, we are using a 125 length, and in the styles tab, make sure that the upper band is colored red and it's set at 125, and that the lower band is colored at green and is set at 25, and you don't need the middle band nor the background. Now for the MFI with EMA, first you need to add the EMA onto the MFI, so that's why we added an EMA onto the chart. Now find that EMA, click on it, and start pulling it down until you reach the MFI. This will place the EMA on the MFI indicator. Now double click on that EMA and set its source to MFI. This way this EMA now will move according to the MFI indicator. Now I already set up the correct settings, so let's go over that. Open up the MFI, set its length to 17. In the styles tab you can untick all of these options, we won't need those. Then open up the MFI based EMA. Make sure it has a 63 length and its source is MFI. And in this case I colored it white. Now we are doing the same process with the ADX with EMA, just like what we did with the MFI with EMA. So just place the EMA on the ADX indicator and change its source to ADX. For this EMA, also use a 63 length, and in the styles tab, I also colored it white. And for the ADX indicator, set its smoothing to 75 and the DI length to 37. And with that, we have all of the indicators correctly set up on the chart. So now, let's take a look on a valid long and a valid short example. I will enable the strategy script again on the chart, so we can find some good entries. Okay, here is a good short example, so let's start off with shorts now. Try to make some space on the chart. Just a second. So this is the valid short entry signal. For a valid short entry, first what we need to see is that the price is closing under both of these EMAs. If you remember, this is our 10 length EMA with a high source and with a low source. Once we have the price moving under the EMAs, we are waiting for the price to close back above the lower EMA, so in between the two EMAs in this so-called EMA channel. That close happens on this candle. Once we got that, we are waiting for a break back down under the lower EMA. So technically this shows that we are in a downtrend. We got a pullback, but the price decided to continue its move downwards, giving us a good entry point and a confirmed trend direction. But that's not enough, of course, for this entry. We have 4 more filters to check. So first of all, our Andean Oscillator. On the Andean Oscillator, for a valid short entry, we need to see that the red line of the Andean is above both the yellow line and the green line. This confirms that we are in a good bearish trend. Then we need to take a look on our CCI, which is this indicator. And on the CCI, the rule is simple. For a valid short position, we need the CCI line to be below the 125 level. This white line is the CCI line, and it is well under that red line, which is our 125 level. Moving on the MFI with an EMA. The MFI shows where money is flowing. The MFI indicator is somewhat like the RSI, but it uses volume too, so it confirms if the volume is headed towards more the bearish side or the bullish side. As we are using an MFI-based EMA, if the MFI is under its own EMA, it means that sellers are more dominant, so it confirms our bearish trend, and therefore, in this case, for a valid short, we need the MFI to be under the MFI-based EMA. And finally, the ADX. The ADX confirmed the strength of the trend, so the higher the ADX is, the stronger the trend is. It doesn't matter if it's a bullish or a bearish trend, it just confirms the strength of the trend. So, if the ADX is above its own EMA, which is the case here, it confirms that the trend is getting stronger than it's usually, and that is the last thing we need to see for a valid short entry. All of the rules are met for this short entry, which means we can take a short position at the close of the signal candle or at the open of the next candle. In live trading, you will get your entry at the open of the next candle, but of course for stop loss placement we are using the signal candle. Now let's enable the stop loss and take profit indicator, the NNFX ATR, and let's see where our stop losses are. And the stop loss will be placed right here at the upper red NNFX ATR line, and the take profit down here at the lower blue NNFX ATR line. Okay, this is how the initial setup looks, but we are using a trailing stop loss, which means each time this red NNFX ATR line moves at a lower level, like here, we are moving our stop loss down accordingly. If it moves up, we are not moving our stop loss upwards, only down. So, as you can see with this red line, which is printed by our strategy script, at this point the stop loss was moved at this level because the NNFX ATR moved down. Here, another down movement, and another one down here. So just remember, we are never moving the stop loss upwards in a short position, only downwards. On the other hand, the take profit level will stay fixed at the initial level, so you don't have to worry about that. Now let's see how this trade plays out. In this case, as you can see, the short take profit level was hit right here, and it was a beautiful trade. Of course, this is a cherry pick trade, I just wanted to show you a good example. Also, what you can observe here, that the trading stop loss ended up right here, which means at the worst case scenario, if the price would have shoot up right here, we would have still ended this trade in a profit. That's the beauty of using a trading stop loss. I can tell you from experience that almost all of my strategies, if not all of my strategies, use some sort of trading stop loss. It protects your gains, locks in profits in the best case scenario, so I always recommend you to use some kind of trading stop loss. Okay, but there's one more thing you need to remember, and that is the 80 candle force exit rule. Which means that if after 80 candles, if this trade wouldn't have been closed, we would close right after the 80th candle has closed. During the optimization, that 80 candle rule gave me much better profits than not using a force exit like that. So now let's measure where is the 80 candle point would have been. Starting from the entry, the 80th candle would have been this bar, but as you can see, the take profit level was hit earlier. Okay, now let's see a long example, then I will show you the backtest results for the last 4 years, then the after optimization date results, the full price history backtest results, and I will also show you the strategy ranking spreadsheet, so you can see how good this strategy ranks against all of our other released TradeSmart AI strategy scripts. Okay, here we have a very long entry. For a very long entry, we need to see the opposite. So the price needs to close above both of the EMAs, which are these two lines. Then we are waiting for a pullback candle that closes inside the EMA channel, which is this candle. As you can see, it closed right here, below the upper EMA channel and above the lower EMA channel. And now we are waiting for the price close back again above both of these EMAs, which means that this EMA area was rejected to the upside. So the price decided to continue its movement upwards, which is generally a bullish sign. But of course we need to confirm this entry by our 4 other indicators, so let's take a look. First on the Andean, this time the green line should be above both the yellow and the red line, and that's the case right here. On the CCI line needs to close above the 25 level, which is this green line right here. On the MFI with an EMA, now we are looking for the opposite, so the MFI needs to be above the MFI based EMA. And on the ADX line again needs to be above the ADX based EMA. This confirms the strong trend. This confirms that the money is on the long side. So as you can see, all of those rules are met on this candle, which means we can enter at the close of the signal candle or at the open of the next candle. Now the stop loss will be placed at the lower red NNFX ATR line here, and the take profit at the upper blue NNFX ATR line right there. And let's see what happens this time. As you can see, our script exited this position right here. But why? Neither the stop loss nor the take profit was hit. And that's when you have to remember to always count how many candles have passed since the entry. Because we have an 80 candle force exit rule. If after 80 candles neither the stop loss nor the take profit is hit, we exit the position. And as you can see, 80 candles have passed, which means that we have to close the position right after this candle. Now, would have been this a good decision this time? Let's see. Yes, it would have been, as just a few candles after that, the price started to move downwards. But of course, not every trade will be a winner. This strategy, I think, has a 50% win rate. But don't worry, you will see the backtest results right now, and you probably will be as shocked as I was. So that's it, now you know all the entry and exit rules of this strategy, you know which indicators are needed for this strategy, what are the optimized parameter settings, and what asset and timeframes we use this on. But before the backtest results, one of the most important thing, the commission and the position sizing. So as I mentioned earlier, for this we are using a special position sizing, which is pretty hard to calculate manually, but let me quickly explain. So here we can see the position sizing, which is set at 6% on the current capital compounding. What does that mean? This means that the position sizing is set in a way that if the price hits the stop loss level, which is right here, it loses 6% of the current capital that we have. So let's say your current capital at the open of this trade was $10,000. Then if the stop loss gets hit, the strategy will lose 6% of the $1,000, which is $60. Now, if your capital would have been $2,000 at this point, at opening this trade, in case of a 6% loss, the strategy would have lost you $120 on this trade. Now, using a compounding position sizing can get you those beautiful exponentially uptrending equity curves. That's why we are using that. So, 6% loss on each entry, using always the current capital. And what about the fees? I set a 0.1% fee on each entry and exit and a 2-tick slippage. And now let's see the backtest results. First, here you can see the optimization date range backtest results. This means that I optimized the strategy parameters between the 1st of July 2021 and the 1st of July 2025. And after the optimization was finished, this is what we ended up with. This blue line down at the bottom is the buy and hold equity curve of Bitcoin, and this green line is the strategy performance. As you can see, the script ended up generating around more than 5 times the buy and hold, maybe even 6 times. It took 324 trades in that 4-year period, which generated 1,119% net profit with around a 25% maximum drawdown, around 50% win rate, and a 1.5 profit factor. For those who are interested, here are the detailed backtest results. But of course, I always say that you always need to check how the strategy performs after the optimization date range, because you can easily overfit or over-optimize a strategy, which means that the strategy will not perform good after the optimization date. So let's quickly check that. I set the start date to the end date of the optimization range, which is 1st of July 2025, and I will set the end date to 2026, the 25th of January. And as you can see in the after optimization date range, the strategy is still profitable. We got around the same profit factor, around 50% win rate, 39 trades, a 17% maximum drawdown, and 32% net profit. But of course, even after this, I recommend to monitor at least for a few months how the strategy performs. Okay, and now let me show you the entire history. So the first available date for Binance BTCUSDT is 17th of August 2017. And as you can see in the whole price history of Bitcoin, our strategy easily outperformed the buy and hold. Now, of course, on a long period like this, we have a much higher maximum drawdown, 45%, but also a much higher net profit, 5,500% net profit. And why I think this strategy has a lot of potential is because the strategy was optimized for only a 4-year period, and it performs good even before that, and performs decent after it too. Now let me set back the original backtesting time interval to 1st of July 2021 and leave it at 2026 for the end. So this is the in-sample and out-of-sample backtest data. I think these equity curves look pretty good, but let's see where the strategy is placed in the strategy ranking spreadsheet. Okay, here you can see the strategy ranking spreadsheet, which you can find linked down in the description. And today's strategy is the EMA channel plus Andean plus CCI strategy, which took the 4th placement out of the around 54 strategies that we ranked so far, which is a pretty good placement. In this spreadsheet, you can find all the details of this strategy. Here you can see the net profit, the profit factor, win rate, max drawdown. But keep in mind that these are only the in-samples, so optimization date range backtest results, which never guarantees future results. As always, I have to say I am not a financial advisor and none of this is financial advice. Always do your own research. And that wraps up today's video. Well, what do you think of this strategy? Do you have any ideas or filters that could make it even more profitable? Let me know in the comment section. If you want access to the full strategy script, check out the Patreon link down in the description. You can get it with 30% off until the 7th of February 2026 by using the promo code EARLYBIRD30 at the checkout. If you would like to try some of the free TradeSmart AI strategy scripts, check out my other videos or take a look at the Strategy Ranking Spreadsheet, both linked in the description. As always, thank you all for watching, have an amazing day, and until next time, trade smart!